My dear fellow participants, thank you, Rima, for this wonderful introduction. As I was hearing my introduction, I was hearing it from your point of view. You probably must be wondering, what's a finance guy doing talking about balanced scorecard in HR? Well, the profile that I had sent into CII was sent a while back and obviously didn't quite capture all my experience. I had done a fair bit of HR consulting when I was in Ernst & Young, and unfortunately it related more towards performance management systems and compensation studies. Balanced scorecard being an extension of performance systems, it kind of ties in. I have, as part of my consulting, done a couple of training sessions on how balanced scorecard can be used for the marketing functions and operations function of an organization. So this is my first foray into balanced scorecard in HR. It was unfortunate that Mr. Ambrolia could not be here. As I told him when he told me he couldn't come, it is like the singer is not there and the tabalchi or the percussionist is coming and doing a performance. I'll try and make up. I mean, it's a big loss to make up, but I will definitely try. So very good afternoon. I do hope we have a interesting session, and I'll be more than happy to take questions as and when they pop up. So I initially thought what would be the best way to do this, and I thought the best way to do it would be to first give a very layman's view of what is a balanced scorecard, because it's not one of those things that is easy to comprehend at the first shot. So I've kind of simplified in a few slides what balanced scorecard should mean to professionals like us. And towards the later part of the presentation, I probably kind of have a few slides on how HR as a function can leverage on balanced scorecard as a tool, and therefore make the function a little more of a strategic partner to business. So that's the agenda for today. So I don't know, can they see the slide? Or
they can see the slide.
So you can see the slide. So balanced scorecard, as you can see, that's the topic for today. So a normal professional, when he joins an organization, it is very natural that he asks himself or herself, what is really expected of me? So that's the question I'm starting with. What is expected of any employee in an organization, right? It depends. And that's a typical answer any management professional would give to any question. It depends. So it depends on what? It depends on what the company wants. Not necessarily, by this I don't mean what the company wants of him. I mean, what does the company really want to do? So first, it depends on what the company wants. Second, it depends on what does the team, or in case a company is not really divided into teams, what do employees as a group need to do to achieve the company goals. So first is, what does the company want, which means what are the goals. Second is, what does the team have to do to achieve these goals. Third is, what do you as an individual have to do to achieve the team goals. If you can see over here very clearly, the moment you talk about an individual, the individual is worried about the team goals and not really the company goals. The reason being, if the company and the team are aligned, then the team goals would be very synchronous with the company goals. So depending on what the team has to do, or depending on the kind of goals the team has to achieve, I as an employee says I need to do these things. And finally, I know I need to do a lot of things, but do I have the resources to do that? So a simple question like what is expected of me, an employee in an organization, is a function of so many parameters. The company's goals, the team goals, my agenda with respect to the team goals, and the kind of resources that I have in order to achieve what I have to do. So therefore, when it is so difficult for an individual to really answer this question, what is expected of me, you can extrapolate this and see that if an organization, or if I look at HR, a function within an organization needs to really understand what is expected of me, it is going to become that much more complicated. Now, through this session of mine, I hope to simplify this complication a little bit through the framework of the balanced scorecard. So, if I look at a company or any organization, obviously reason for existence, why does the company really exist? It has to the stakeholders need to generate value or need to receive value. So, for example, if I'm an equity holder, stakeholders are plenty. If I'm a shareholder, the owner of the business, the value that I get is in terms of the dividends I receive, or in terms of the share price of my stock in the market, in terms of the prestige that I get when I'm associated with a particular company. So value, both tangible and intangible, exists for a shareholder. Likewise for all the stakeholders of any organization. So if the reason for existence is value, it's probably good to understand what value really is. So there are many ways of expressing value. I chose this one. It is basically consisting of two parts. One is the value proposition, or the price that customers are willing to pay, right? That's on the one part. And the other part is, in order to make them pay that value proposition, which is the price, what are the costs that the organization needs to incur? And if I take the difference of that, this is what value remains for the shareholders, right? And obviously, if you have to create more and more value, you have to either increase the value proposition disproportionately to the cost that you incur. Only then the value can be created. Or if you have already decided that my value proposition has been realized, you got to do it at a lower cost. So this is value. Now I'm actually linking this to the previous slide, which says what is expected of me depending on what company wants. Company wants value creation. Now if company wants value creation, how do I, who is an individual in this organization, make sure that value is created? And this is where the role of HR comes. Somewhere later in the slide, I've kind of linked HR's role in the value creation process. But as an introduction, I thought this made a lot of sense, right? The reason why companies exist is to create value for shareholders and stakeholders. So when you look at any strategic planning exercise, we normally talk in terms of these parameters. We first say the mission. I'm sure you're all academicians, so you must be either teaching business strategy, or you must have been sitting in a class where business strategy is taught. So mission, our reason for existence, why do we really exist, the values, how do we make sure that there are certain principles that we do not deviate from when we go ahead and justify our existence, vision, where we want to be in a particular time frame, strategy, how are we going to get there, initiatives, the strategy broken down into smaller pieces, and finally the personal objectives which every employee in the organization needs to do in order to make sure that the vision and the mission are realized. Now at the end I have one, which is measurement. Measurement is not quite part of the planning exercise, but unless you measure, you don't really know if you're going in the same direction that you wanted to go. I always give this example in class. Supposing you have, let's say you've gone to a totally new place and you booked a bus ticket from destination A to destination B. Now you don't quite know whether the bus is going in the right direction, but if you keep looking out of the window and you see those milestones, and the milestone says destination B 15 kilometers, destination B 12 kilometers. So when you keep monitoring you know that you are moving in the right direction. For an organization, this happens in the terms of measurement. You measure, have I really moved closer to what I wanted to achieve? And in a way, many of the balanced scorecard components are measurements. So it's good for us to know that one of the ways by which the strategic planning exercise is kept focused or kept in direction is to have periodic measurements. The question is, what do we measure? Later. So with this small introduction, I thought I can introduce what the balanced scorecard actually is. It is a strategic management system. So in the earlier slide, we told you that strategic planning, vision, mission, all are components of the overall strategic thinking of an organization. So the balanced scorecard actually is a system that enables organizations to achieve their strategic objectives. So it is actually a system that enables achievement of strategic objectives. Second, another way of looking at it is it's called a balanced scorecard. Now obviously whenever we use the word balance, something has to be balancing, right? There must be two dimensions and those two dimensions must be balanced. So the balanced scorecard actually is that because it balances outcome measures and performance drivers. Small history. Actually, the balanced scorecard came into existence when people really found out, and unfortunately found out by making mistakes, that only one kind of measurement, which was the outcome measurement, was not adequate for organizations to really achieve their strategic goals. Outcome measurement could be, for example, the most well-known and acceptable outcome measurement is the company's balance sheet and profit and loss statement that is prepared at the end of the year. Now, as you all know, and if some of you have got prior experience in HR, you would know that HR also does performance appraisal. And obviously for senior executives who are having responsibility for profitability, responsibility for top line, bottom line, they will be measured on an outcome. So an outcome measure is used to understand performance, but the issue here was an outcome measure is post the event. I have done something 6 months back and the result of that is seen now, but as opposed to an outcome measure, a performance driver says, what am I doing now to ensure that the future is what I want it to be? So there are two aspects. One is the outcome measure. I have already done something and I'm trying to measure how well have I done that. A performance driver is I'm doing something with an objective of enabling or enhancing or influencing the performance, driving the performance. So this is a balance. A balanced scorecard actually does that. Okay, if I'll give you an example later on. Also balance because it is not possible to have everything objectively measured. A simple example is if I take a job description of a sales executive, then I can very easily measure the sales targets that I set for him. That's an objective measure. But can I really measure the comfort level that the clients have with him, with the sales executive? That means the trust that he has built over a period of time, the kind of equation that he has with the clients. These things normally are a little subjective and therefore do not fit in the traditional performance measurement systems. So a balanced scorecard actually has an objective of balancing two kinds of measures. One is an objective measure and one is a subjective driver. Because trust in my earlier example or equation in my earlier example drives future performances. So therefore it was felt that the way businesses really looked at performance or looked at effectiveness of strategic thinking was found a little lacking because it was only measuring outcomes. And they learned the hard way when they found that in spite of doing well on the outcome measures, why is it that I'm not really progressing? That's when they thought probably a more comprehensive way of understanding my strategic objectives and maintaining strategic focus is to have a more balanced way of looking at various parameters. It is called perspectives in the Balanced Scorecard lingo. So you see here, I don't know, if the font size is probably a little small. I'm sorry about that, I'll read it. In the center, which is a little oval shaped, we have what is called the Balanced Scorecard. And I have 4 circles around it. And all these circles, they are actually, it's a cyclical thing. So I'll start from the circle on the top, immediately above the Balanced Scorecard. It says clarify and translate vision and strategy. So if you really want a good strategic framework in order to achieve your goals, you have to first ensure that the organization's vision is clarified and translated down the line. I'll give you a very simple example, not quite related to this. I was a few years back, I was asked to address a group of executives in an organization on performance appraisal. So they told me to actually talk to them for a couple of hours. The company was in existence for several years. They had good appraisal forms in practice. So 2 hours is probably not enough time to do a session. So I was wondering how best should I do it. And then I chose to do something, and I didn't expect it to be so effective. What I did was I distributed copies of the performance appraisal form to all the managers. Some of them are senior managers. And the appraisal form had several parameters. One parameter was integrity. One parameter was, hard working or whatnot. The standard stuff you find in an appraisal form. So I just asked these guys to tell me what they understood by these words. And it was so shocking that the same gentlemen who have been filling these appraisal forms for years and years never actually knew what these words meant. So they just assumed integrity meant something else. Somebody else thought that punctuality meant something else. So there was utter chaos because they have been ranking employees on a very vague understanding of the terms. So here HR as an institution or HR as a function failed in communicating and clarifying what these terms meant in the appraisal form. Similarly, if you really want the entire organization to move in the same direction, you have to clarify and translate the vision. What may be very clear to you, and as teachers we all know, when we teach the class, we feel that the concept is so easy, but then we find the students don't understand. Why? It's because what is so easy to us need not be as easy to many of the people. Therefore, unless you clarify and translate the vision and strategy down the line, you would be in a totally different track, and the entire team that's reporting into you would be in a different track. So obviously, in order to have a good framework to implement your strategic thinking, the first and foremost thing is clarify and translate your vision and your strategy in simple terms down the line, right? So this is number one. Number two, I'm talking now about the circle on the left of Balanced Scorecard, which is communicate and link. Now, communicate and link, these are at least easy words to understand. What am I communicating? What am I linking? I am communicating to the entire team what are the various steps that the organization has taken in order to achieve its vision and its strategy. So there has to be constant communication from top to the entire organization about various initiatives or various steps the organization has taken. Link is if you want to go on a particular, I'll go back to the same example of the bus. If I want the bus to go from destination A to destination B, But let's say the bus driver has got an incentive that if he goes from destination A to destination C, then he gets about 20% of his salary as an incentive. He is not going anywhere near B. So linking talks about linking your rewards with the kind of performance that you expect from employees, and that performance has to be connected with the strategic vision and the strategic thinking. So communicate and link is about performance, reward, and communication. And this, the left hand side, that circle, is very critical for the HR function, because they are the, if I may use the word, the link between management thinking and employees. The one below the balanced scorecard circle is plan and set targets. So you have got the vision, you have communicated the vision, you also kind of have a system by which you can link the performance and the reward. Now you have to set targets. Now target setting is important because you have to have the bigger target in mind. The bigger target has to be broken into smaller targets, and the key thing in all these target setting is the alignment must not be compromised. So at any point in time, the alignment between individual targets and team targets, alignment between team targets and organizational vision has to be very, very straight. So that is the key in the planning and setting targets. And the right hand side circle, which is next to balanced scorecard, you have the strategic feedback and learning. As HR professionals, we know that unless we get continuous feedback about what is happening, and by the way, it is quite possible for non-strategy employees. When I say non-strategy employees, I mean employees who are normally doing operational work, who are doing process or tactical work. They can give feedback on any strategic initiative, because ultimately it's an organization, and anybody is entitled to give feedback, and only through feedback does the organization learn, strategic feedback and learning. And once the learning is done, whatever corrections need to be made in our directions, we will do that. So this is a very simple strategic framework for action. So I've got some further thoughts on each of these things. Probably I have covered some in my earlier thing. The second point in this slide about gaining consensus, it's really very important. And if you really read the book by Kaplan, or Kaplan has written several books on Balanced Scorecard. The first book was Balanced Scorecard. The second book, which is I think a very powerful book, is Strategy Focused Thinking, and that's actually it's like a sequel to the Balanced Scorecard, when they actually found that Balanced Scorecard can be a very powerful tool for ensuring that companies stayed focused to the strategy. So in that he tells that gaining consensus is so important. Now if you have a team of 5 or 6 or 10 people at the helm of an organization, even if 1 or 2 are not quite in sync, you can always say majority wins and go ahead. But at that level, on vision and strategy, consensus is more important. The team that is driving the entire strategy of the organization has to have some kind of a consensus, and it is possible. It's not that it's not possible. So when somebody is of a differing view, obviously there's a couple of things about a particular vision that he or she is not in agreement with. So consensus is only done through discussion, through clarification, and once the clarification, that's why you see the first and second point, you keep clarifying and the consensus happens. Once the consensus is there, you don't have to worry, because when these pillars of your management organization go down and translate this vision, you will know that they are translating the same message down. This is about the first part, clarify and translate vision. So here the key thing is, I already told you this, so I mean there's nothing much to say. Probably I did not use the word educate in my earlier explanation. I think education is as important as communication, because An organization consists of people of different culture, different experiences, different qualifications, different levels of maturity. So it's quite possible that there are people down the line who actually feel that what the organization is doing is something drastically wrong. As an example, I remember, I was only a stakeholder. I was not even a member of the organization. When Airtel initially launched its prepaid services, me as an outsider, but who was a regular Airtel customer, felt that something was wrong, and felt that, listen, what is the organization doing? Why is it doing this? So it's quite possible for people to develop all kinds of thoughts and all kinds of feelings about a particular strategy, and therefore the need to educate them, to make them understand why is it that this is important. Because if any person in the link breaks or violates whatever needs to be done in order to move towards the direction, then one can never reach there, right? We all know that the engine is the most important part of an automobile, but if those 5 nuts that hold the tires together decide that that's not their job, and therefore I don't think I should really hold the tire together, I can promise you the vehicle will not really go forward. So you have to educate people below the line, and that's as important as goal setting and linking of reward and performance. This we have covered, and as I told you, it's about not only setting of targets but aligning of all initiatives right from the bottom to the top. And yeah, the third part, once you set targets to somebody, you have to allocate resources. It's not fair. You can't have a target without having providing the wherewithal to implement. For example, if you tell somebody that you have to, since you're all HR professionals, let's take a simple exercise of manpower planning and recruitment. Let's take recruitment. If you tell the HR team that you have to hire 150 professionals in the next 3 months, then obviously you got to give them some resources. What could the resources be? Resources could be additional manpower to help them. Resources could be additional budget so that you can use consultants, and consultants do charge money. Other resources could be allow some budget in the term of referral fee or whatnot. So either money or manpower, and if 3 months is not a fair estimate of time, maybe some additional time. So therefore allocation of resources has to go hand in hand with the target setting. Milestones we already covered. In the strategic feedback and learning, so you have to facilitate a strategic review and learning. So, you must not be so convinced that your strategy is absolutely working and therefore ignore the feedback that's coming. You have to facilitate a strategic review, and obviously you have to facilitate it with a very open mind. Only then can there be corrective action. So these are the 4, I would say, blocks that form part of the strategic framework and help taking strategic initiatives forward. So now, balanced scorecard, actually, now that we've done so much of discussions, or I can't say discussion, it's a one way. Now that I've shared so much, it'll become a little easier for you to understand a balanced scorecard and its what it has to offer. So a balanced scorecard actually says that there is more than one way of looking at strategy or strategic focus, and it says there are 4 balanced perspectives. Balanced means all of them are important. It's not that one is compromised for the other. The financial perspective is something we are all very comfortable with. When I say very comfortable with, I know that you being HR professionals may actually feel that finance is something that is, not quite your cup of tea. But as I say, familiar with, because finance, we're all aware about financial reports, we're all aware about financial metrics. So this perspective has been in existence for several years. But the difference with the balanced scorecard brought was that this is not enough. You need some other perspectives. The second is the customer perspective. Third is the internal. When I say internal, let's talk about the internal processes or the internal business processes in a perspective. And the fourth is the learning and growth perspective. Now, if I was to show this, only this, to any HR professional, unfortunately, the HR professional would think that the last, learning and growth, pertain to them and the other three pertain to everybody else. And this is the reason why Balanced Scorecard becomes such an important tool, because it does not say that you must compartmentalize. So whenever you see the word learning, please don't think that it is an HR function. And whenever you see the word finance, please don't think it's a finance function, right? Every individual, every team, every department, if I may use the word, has to have a financial perspective, has to have a customer, has to have an internal business perspective and a learning and growth perspective. It applies to all functions, individuals, teams. I hope this is visible. If it's not, I'll just tell you. The financial perspective actually says, in order to succeed financially, how should we appear to our shareholders, right? So how should we appear to our shareholders? So in other words, in a simpler way, it says, what kind of financial objectives do the shareholders want met, right? And there are many such objectives. For example, you may say shareholders would want so much return on their investment. Shareholders may want so much of profitability. Shareholders may want the market price of their shares to double, to become 4 times, whatnot. So the question that this is the financial perspective is asking is, in order to succeed, what should we, how should we appear? So therefore, as you can see, there are putting boxes over there. You have the objective, you have the measure, you have the target, you have the initiative. Given that this is my perspective, what are the objectives? An objective could be, I'm going to focus on profitability. So measure, how do I measure profitability? Do I want to measure gross profit? Do I want to measure net profit? Do I want to measure operating profit? What's the target? My target could be 20% more than what it was last year. That could be one way of expressing target. Target could be a number. I want an operating profit of $20 million this time, whatever. Target. And then initiatives. In order to achieve the target, what kind of initiatives should I take in this current period such that it is met? So that's the financial perspective. Like that, for each of the 4 perspectives, you have the objective, the measure, the target, and the initiative. On the customer side, it says, to achieve our vision, how should we appear to our customers? So let's say if my vision was that I wanted to be the best B school in Chennai in the next 5 years, and who are my customers? My customers are probably my students. My customers are probably the corporates who come and hire my students. And therefore, if that is my vision, and if I don't schedule classes properly, I don't have qualified faculty teaching, when the companies come for placements, I give them absolutely below par students. Obviously, there's a big gap between what my vision was and what is the way I'm appearing to my customers. So therefore, a customer perspective said, in order to achieve my vision, how should I appear? What kind of communication, either tacit or clearly in words, should go from me to the customers such that they see this vision getting translated. Learning and growth objectives. To achieve our vision, how will we sustain our ability to change and innovate? I think that's the word here. I can't see it. So learning and growth. I mean, we have all been hearing as management teachers, sustainability is there in any initiative that even the government brings in, right? So obviously the learning and growth perspective say, okay, fine, we have done something, but how do we ensure that we can sustain whatever we have done, or we can sustain our ability to change or to innovate the way we do business as and how it is required. The internal business process is basically in order to satisfy our shareholders and customers, what kind of business processes must we excel at? What kind of business processes should we excel at? I mean, the word excel should not be subject to interpretation. I mean, I know that we are all different human beings, and therefore each of us have our own idea of what excellence means. But when this is talking about excellence, fortunately, there are enough tools that are there to describe business process excellence. And one such tool could be the Six Sigma, which says that you achieve some level of excellence in your processes. So this word excel is not subject to interpretation. It is accepted standards of excellence. So actually you now see that earlier, and you can't see what I'm doing, I'm trying to hide the other three perspectives with my hand. Earlier, financial perspectives were ruling for several years, and slowly organizations understood that if I only focus on how we should financially appear to our shareholders and not really worry about are we communicating our vision to the customers, are we really sustaining our efforts or our ability to change, to innovate, and are we moving towards business process excellence, eventually our strategy would not succeed. This is the Balanced Scorecard, and the interesting thing about this, I would recommend all of you to read these books that Kaplan has written. I'm not saying it's easy to understand, but I'm saying that if you read with an objective of implementing, you'll really find it easy. Right? So this is my, how do I translate my vision into strategy using the 4 perspectives of the BSC. Now, whenever you talk about Balanced Scorecard, there is a lot of talk about lead and lag indicators. I think I'm spending too much time, isn't it? It's already 3:45, I'm worried. Anyway, I'm sorry, professors normally tend to take time, so I took it as a class. So if I need to hurry a little bit in the later slides, my sincerest apologies. I think you must know about this technical terminology that is used in whenever BSC implementation is talked about. They talk about a lag indicator and a lead indicator. A lag as it says, lag is something that is delayed, and lead is something that is an initiative. So a lag indicator is a measure of an outcome. It is a past initiative or a past implementation, and that has resulted in what I'm measuring. The net profit is a lag indicator. The attrition rate is a lag indicator, because these are all measured after whatever has happened. For all you know, the attrition took place because you had a nasty boss. So, you know, the lag indicator is attrition. But if you had wanted a lead indicator, you could have done some studies on your managers and prevented attrition by happening. You could have done some training to maybe convert your managers into more people-centric human beings, and therefore you will be driving performance of good retention or performance of good work. So those are all lead indicators, right? So it's important to understand, because one is an outcome measure, the other is a performance driver. Together, these measures constitute the BSc objectives. So what I've got over here is, I have actually got an example of each of these perspectives, and I thought that will be useful. I mean, these are all ways in which financial perspectives are expressed: revenue growth, value maximization, cost reduction, asset utilization. And the example I have here is, let's say if my strategy was asset utilization. Supposing I decided that this year I'm going to focus on using my assets better. So I said, okay, how do I know that my assets are going to use better? Ultimately, it will result in a better return on capital employed. So while my asset utilization is a strategy, my objective is to focus on return on capital employed. How do I measure that? I measure that by one of the factors that affect my ROCE, which is my operating cycle. And what is my target? I'll ensure that my operating cycle is not more than 45 days. Probably it is 60 days now, it is 70 days now. So now if I have to really reduce my operating cycle to 45 days, what are the initiatives I must do? I must implement I mean, I'm not saying I must. I could implement just in time, because just in time normally results in a fairly low amount of stock. I could liquidate whatever dead stock I'm carrying. I could liquidate my receivables that have become very old, aged receivables. And therefore, these are the initiatives I would take to ensure that my OC, operating cycle, is within 45 days, which in turn would mean that I am able to generate a higher return on my capital employed, which in turn means that I have utilized my assets effectively. So this is the way a financial perspective will go from strategy till initiative. And if you see in the earlier slide, I'm sorry I'm doing this, I hope I'm not confusing you. If you see here, you have the objective, you have the measure, you have the target, you have the initiative. This is what I'm giving you for each of these perspectives, right? The objective, the measure, the target, and the initiatives. So I have a customer perspective. Customer perspective, there are two types of perspectives. One is the core, if you look at market share, customer retention, customer acquisition, these are things that could apply to any organization. Customer satisfaction, customer profitability. Customer profitability, by the way, in case, for those of you who don't quite understand what it is, customer profitability goes hand in hand with customer retention. And the philosophy here is, if a customer is not profitable, don't waste your money retaining him. Let him go, right? So gone were the days when I'm going to spend any amount of energy and any amount of money to retain all my customers. No, I'm a businessman. I retain only those customers who are profitable to me, which means I'm actually willing to let go those who are not, right? So these are the customer perspectives, and these perspectives could apply to any organization. So they are called the core perspectives with respect to customer. Then I have the other, which are non-core, which is about the product and service attributes. So if you look at functionality, quality, price, and time, there is a tool called quality function deployment, QFD. And QFD actually does this. It goes through the product or the service attributes and looks at every attribute and say, how does this attribute actually add value? And therefore, it's a means of finding out, should I really develop this particular attribute in the product? Do I remove it? Do I modify it? So it's a good tool. So product and service attributes. Second is customer relationship. Not the same as retention. Relationship is, how do I work with my customer in order to achieve both our goals, right? My goals as well as the customer goals. And this includes, for example, knowledgeability here talks about my understanding of the customer's business and my educating the customer about my business, right? So that's why it's a two-way relationship. It works that way. A convenient access. The customer must know that he or she can access our organization whenever they want, right? If you ensure, we have this lean and responsive system. So we're talking about responsive service in the sense that you have to respond when you know that your customer needs a quick attention. You must respond quickly. When you know that it's a nice to have kind of a request, then you have to respond in a nice to have manner. So this is how you build relationships. Ultimately, if the customer tells people, and there are many CRM models which actually says you first, when you go to a stage where the customer is referring you to other customers, that's when you know you have reached the peak of CRM, customer relationship. So in our parlance, if our students go and tell people, look, join this particular school, they are really good, that means that we have managed to take the relationship to a level where they have now become our referrals. Image and reputation. So these three are the non-core measures, because this differs from organization to organization, whereas the earlier 5 measures are those that can kind of apply to any organization. This is the customer perspective. Now mind you, the traditional way of managing performance did not quite capture this part of the organization's capabilities. Hence the difference between BSC and this. An example, supposing my strategy was customer satisfaction, and I'm talking about let's say a spare parts business where I am selling spare parts, and the way I am translating my strategy into an objective is to make sure that I have stock. When I say I have stock, when the customer comes and says, I want this particular part, I should be able to tell him that I'll be giving to him. So the measure is first time fill rate. That means if he has a list of 10 items, in the first shot I should be able to fill 10 items. What is my target? I'm being reasonable. I'm saying I'm probably going 100%, going to be a little bit of a challenge from where I am, 98%. So technically speaking, if you want 100 items, I'm able to give 98 items across the counter. For 2 items, I'll probably have to tell him that, look, I'm sorry, but can I actually give it to you, have it delivered to you. So this is the customer perspective. Well, how can I do this initiative of 98% first time fill rate? I need to implement certain inventory management systems in my organization, ABC, FMS, XYZ, VED, whatever. There are all these 3-lettered word, acronyms, but all of them are important and they actually help you make sure that you achieve your customer satisfaction. I'm actually doing a lot of work for Escorts on spare parts management, hence this thought came to me, and the kind of inventory that distributors carry in order to make sure that their customers are happy has to be seen to be believed, right? Internal perspective. Internal talks about internal business processes. So obviously whenever you talk about processes, operations come into play, customer management, because one of the processes that is important is your product delivering what the customer wants. So, that's one. Second, receivables management. So that's again a process. So are you able to communicate your collection policy, your credit policy clearly? Innovation, statutory also, processes. There are certain processes which are required because of statute, and therefore all of these are part of the internal perspective. An example could be if my strategy was operational excellence, right? And let's say my objective was how to make sure that I deliver my goods to the customers in the minimum possible time. Measure obviously would be to my time. I've taken an example of a bank. If you all remember, one of the public sector banks, I think Canara Bank, I'm not sure, they brought into process this, saying that, look, they were displayed in the entire organization. If you do not get your DD, it's probably 30 minutes is too high, or maybe when it was implemented initially it was 30 minutes. So they actually put a time and said, I'm going to ensure. I don't know how many of you, I don't know the average age of the people who are listening, but I'm an oldie, and I remember how long I used to go and wait for a DD to come. You go and give a request, and then they say, okay, wait. You keep waiting. After half an hour, 45 minutes, you go and say, is it ready? They say, no, wait. So it used to take so much of time. But this bank, and I'm talking about several years ago, said, no, we must make sure that we achieve some degree of operational excellence, and therefore they said that the time required to prepare a DD, 30 minutes is too much, probably I'd say 5 minutes or 6 minutes, whatever. And therefore the initiative they have to do is they have to have some kind of an automated process to make sure that they check if the bank with whom it's drawn on, all other record updation is done automatically, and there must be some standard operating procedures so that even if there's a person over there who has come for the first time to this department, he should be able to do it. So this is an example of an internal business process perspective. Finally, you have the learning and growth perspective. You have the human capabilities or human capital, the ability of the organization to use information and grow, the ability of an organization to ensure that the culture, the alignment, the leadership capabilities, and the team building abilities all are in sync, right? An example would be if my strategy was to build employee capabilities, and my objective, I said I will do that by increasing the effectiveness of teamwork, then I can have as a measure the percentage of employees who are on team-based incentives, right? Because if you have individual-based incentives, then you may actually feel that if I work in a team, I may lose money. So my target, let's say for this year, I'm starting now, by the end of this year, 50% of my employees should be on team-based incentives. That is one way of making sure that the teamwork increases and therefore the employee capabilities are built. See, the recent example about the Australian cricket team asking 4 of its players to leave the team because they did not do what was expected of them is again an example of how important it is for people to be a part of a system. One of the guys, Shane Watson, was the vice captain, but they don't differentiate. If there's a policy and somebody violates that, he may be the president, he may be the vice president, the vice captain in this case, the rules apply to all. So to build employee capabilities, more and more they must work together as a team, which means there is no unnecessary preferential treatment given to people, there's no biases, all those come over here. So how you can do this initiative, set up cross-functional teams, design and implement team-based incentive systems. So this is the Balanced Scorecard has got 4 perspectives. I've talked about all the 4 perspectives. We have the learning and growth here. Before that we had the internal processes. Before that we had customer perspective, and before that the financial perspective. And I've given examples of all. So I don't know how clear this is to all of you, but this is what's called a strategy map, and this is how you actually use the perspectives to build. I'll go in the next slide because the last part of the strategy map is there. So you see, this is the learning and growth perspective. So you have the human capital, you have the information capital, you have the organizational capital, and you have all these guys. So ultimately, it is how you align the individual, the team, the leadership, the culture in order to work together on the information that is available, such that they become more engageable, or more capable of doing things, such that the processes can achieve excellence, such that the value proposition of the organization to the customer increases, such that the organization achieves its financial perspectives or its growth strategies. So I mean, it's all linked. Internally, we have to make sure that we draw out a strategy map and say, if this is what we want, how does the perspectives translate to each of, how does the vision translate to the customer perspective, how does it translate to the internal business processes, how do we ensure that the learning and growth is able to adapt people to change to various requirements. So this is a strategy map. I don't know if they are planning to give this presentation to them, in which case they can. Yeah, so you will be getting the presentation. So in case you didn't have time to read it, don't worry. You can go through it in leisure, and obviously you can always communicate with me if you have problems. So this part, okay, I'm not too bad. I've got a few slides left. So till now, all I tried to do for you is to give you an understanding of what is Balanced Scorecard. And now, in the next few slides, since you're all HR professionals and HR professors, how does the human resource function evolve as a strategic partner, given the fact that the organization has got a Balanced Scorecard focus? It's called a BSC focus in short terms. So you can have, if you look at how HR itself evolved as a strategic partner, HR had several perspectives. It had the personnel perspective, the compensation perspective, the alignment, and the high performance perspective. In the personnel perspective, initially they were, HR was supposed to hire. So you get me people that I want. So that was the, and basically their ability to provide people that people wanted was the perspective of HR. So, it is actually was just a feeder into the main system. Then you started having the compensation perspective, where you said, okay, you're getting me people, that's fine, but by the way, why don't you actually find out how much I should pay them? Am I really paying them more? So the role of HR started evolving and saying, look, not only am I finding your people, I'm also telling you for the various qualifications, experience and whatnot, all your Hayes method and all your factor comparison methods and all that, what kind of money should you pay for this individual? You do a salary survey, you do a benchmarking, I want to be third quartile, I want to be second quartile, I want to be whatever, and then say this is my compensation. So you started evolving a little more, but then that was not enough. Since third, and this is where the alignment perspectives, where HR started moving closer to becoming a strategic partner, where they say, look, not only should I hire and tell you what to pay, I think I should also align them towards the strategic thinking of the organization. And this was when slowly HR started moving into the strategic partnership role. And the last role is about a high performance perspective is, not only am I going to align, I'm going to introduce means by which the perspective of having high performance individuals driving high performance results is going to, so you see how it has just moved from a supplier of manpower to a driver of performance. So this has been evolution of HR as a strategic partner. But even then, because the HR function has not quite linked their role to the overall views of the organization. That is why, you will find if you do a survey, and I've seen it so many times, if you do a survey, you'll find that except the HR department or HR function, everybody else thinks they're not doing anything. So why is that? It's not because they're not communicating what is to be done. It's because somehow they have not enhanced their role into the last two. The alignment part and the high performance driving part is something the HR has not quite moved into consistently across organizations. Right? So what are the key issues facing HR? Now that's why I brought this slide here. And if you remember, I talked about value earlier. We know that organizations need to create value, and we also know how organizations perceive value. However, HR as a function is interacting with people, and unless people create value, organizations cannot create value. So therefore, HR has to understand, how do people create value? I mean, I'm sitting in my desk and doing some work. How do I really know that I'm creating value? Second, assuming that I am creating value, how do we measure it? And third, how do we manage this process, the process that's creating value, to ensure that the value keeps coming? So these are the issues facing HR. I don't think there are any standard answers to this, but if you really look at the earlier slide, I think if you align and if you provide an environment that respects or brings out high performance, you would definitely be at least managing the value creation process. Measurement of value is relatively easier if you look at your KPIs and your KRAs. Then in a way, if you tie in your KPIs and KRAs with, that's the alignment again, with the organizational goals, in a way you are trying to measure value. And creating value, HR can facilitate that by bringing in that learning and growth perspective, fourth perspective, by bringing an environment where people can innovate and people can give suggestions, people can facilitate change such that value is also created. So therefore, these are issues that are facing HR constantly, and it's their ability to deal with issues like this that makes HR as a strategic function. So we have the laws of systems thinking, and you have the HR system. See, today's problems are a result of yesterday's solutions. If you go back, you'll see that, and I can share my experience. When I was in my earlier company in Telco Jamshedpur, the quality assurance function where I was a very notorious department, because they had a policy then, all troublemakers they'll push to the quality assurance function. So that was a solution to one problem. Somebody is creating problems in my department, move into quality assurance. But this solution became a problem tomorrow when the quality started suffering, because you didn't have competent people in quality. So please understand, today's problems are a result of yesterday's solutions. HR is the department or the function that brings or inducts employees into the organization. In order to solve a particular problem, somebody needs a person. So you know that the person you're selecting is not really all that good, but to solve the problem, you bring the employee inside the organization. You're stuck with another problem later on because you don't know what to do with the employee. So please understand that HR system also has to fall into the universal laws of system thinking, right? Second, easy way out usually leads back in. So, what could be the easy way out? The easy way out is to not do a thorough job in reference checking. So let's say Rima is my friend, and she says, look, Sridhar, I got this very good person, and he's really a great teacher. Now, I'll say, fine, I know Rima well. So if I take Rima at face value and do not do my normal thorough reference checking or normal thorough assessment and take the easy way out, is going to backfire sooner or later, right? That's the second. Cause and effect are not closely related in time and space. Lead and lag. The cause and the effect may happen 8 months down the line. Effect may happen 1 year down the line. So if you are an HR professional and let's say somebody has initiated a particular process or a procedure, and appraisal time, the effect has not yet come. If you don't recognize that initiative he's going to leave and go. And if he leaves and go, the effect which actually would come a few months later would not be available. In fact, today's HR professionals are actually thinking that CEOs should be rewarded even 6 or 8 months after they leave the organization, because whatever the organization is getting for the next 8 or 9 months is because of what the CEO has done when he was there. So I'm just saying that cause and effect are not closely related. There is a lag. There is a visible difference between the cause and the effect, and that is something the HR system has to recognize. Cutting an elephant in half does not give you two small elephants. So, this is this saying that go away from the silos. Don't create silos. The good old cross-functional way of thinking is the best. The good old cross-functional teams are best. But if you try to split functions into narrower and narrower silos, and people do that. Why do they do that? Because they want to promote somebody. They are afraid that if they don't promote an employee, he'll leave and go. So they create another sub-function and make him head of that. So the more and more you create or cut the elephant in smaller pieces, what you get is a total mess. You don't really get cootie elephants. So you have to understand that the HR system has to respect the general systems of the general laws of systems thinking. So I think this is a concluding slide or two, and it talks about what steps do HR take to emerge in a strategic role given the BSC framework. This is how a balance, this is called HR scorecard. This is how an HR scorecard is prepared. Obviously, HR also has to look at itself and say what is the HR vision, what is the HR mission, and what is the HR strategy, and then say what could be the financial perspective of the HR function, what could be the customer perspective of the HR function. That's how HR scorecards are created, and these are kind of steps to make sure that HR as a strategic role does that. First is to clearly define the business strategy of the HR function and align the HR business strategy with the business strategy of the organization, right? Now, once you do that, you have to build a case for HR to be part of a strategic asset. I mean, you got to convince the strategic thinking, the strategic team that look, you have a vital role to play in the organization achieving its strategic goals. Once that is done, just like the strategic map I showed you earlier, you create a strategy map. This is called the HR strategy map, and that actually tells how does, if you remember, the strategy map goes across all the 4 perspectives. So you do a strategy map with respect to all the 4 perspectives and say, how do I achieve my strategic contribution to the organization's overall strategy. I then identify the deliverables of HR. What are the outputs that I'm going to give that ties in. Align the HR architecture. Architecture means the functioning of the HR role. Link it to the HR deliverables. Then design a measurement system, and finally implement management by measurement. Okay, so I took 5 minutes more than I should have. I started at 3:05. I should have finished at 4:05. It's 4:10. I'm sorry, but that actually means you have only 20 minutes left for your questions, and my apologies for that, but it just happened. So thank you, ladies and gentlemen, and I don't know how the questions are asked normally.
They will have to enter it in the question box.
You have to enter your questions in a question box apparently. I can't see the question box here. I have to close the presentation?
No, just.
Yeah. So you got to go, where do they have to go?
They will have to go to the questions. You have to go to the question box.
So you have to go to the question box. Oh, not able to hear.
And that must have been he managed.
Okay. I'm also not. tools for building and managing scorecards.